on Business Incorporated today. Nigeria signs a deal with Cuba on vaccine production. Kenya president increases minimum wage by 12%. Mauritius leads African countries in Chandler Good Government Index. Hello and welcome to the program. I'm Ini John Mekwa. I'd like to wish all our Muslim brothers and sisters a happy holiday, and of course, a happy holiday to the workers also. Welcome to the show. And because of those holidays, the markets in Africa and the Middle East are closed today. So we will start with what's going on in Berlin. Germany is now pushing for the EU to target Russian oil imports in a sixth package of sanctions. This was revealed by the foreign minister. Before now, we saw that Berlin was reluctant to move quickly on fossil fuel sanctions against Moscow because of the war going on in Ukraine. The country remains one of Europe's largest importers of Russian oil and gas. Well, we have to fill us in on that and much more. We have Stephen Birdsley joining us from Berlin. Hello, Stephen. Happy holiday to you. What's behind this Berlin's turnaround on oil?
Well, I would hesitate to call this necessarily a turnaround. It's been something that Berlin has been eager to do, to be able to announce that they too can support these oil sanctions that a lot of other countries have frankly been pushing for quite some time, and that Ukraine has been making a lot of noise about since the beginning of this war. Ukraine obviously wanting to see all European nations isolate Russia by getting rid of Russian fossil fuel imports. That includes coal, which has already been sanctioned but doesn't go into effect until later, and that includes oil and gas, those latter two especially important. Now, Germany's economy minister has already announced, as of a few weeks ago, he announced that by late summer, Germany would be ready to quit these imports. And that really is the key here. You know, you can go ahead and announce these sanctions and go ahead and formulate the sanctions package. The question is, when are they going to go into effect? That means that Russia will be earning these revenues from oil for the next few months if they're going to go into effect by late summer. And there's going to be a bit of pressure on Germany, not just to support these sanctions, but to get them in place as soon as possible. There are some other questions as well, including Hungary's stance. Hungary being another nation that has hesitated really to put in fossil fuel sanctions or to agree to them. So that's going to be a question. You know, Germany is one of the biggest importers of Russian oil, though. So this is a big deal. They've managed to lower that amount, however, over the months and find alternative supplies. And so this is a big deal. Again, though, that question, when is it going to go into effect?
Yeah, and it'd be good to know, what does an embargo mean for Russia? We're just looking at Germany and the EU, but what would it mean for Russia?
I think that's one of the big questions here. It's often been said that oil is more important for Russia than gas. Gas is more important for the European nations that import it. But for Russia, a greater part of its GDP comes from oil exports than from gas exports. It is one of the world's largest exporters of oil, and about 60% of those exports go to European countries. So if they act together and are together on this ban, then that would, in theory, make a huge dent. There's also reason to believe that Russian oil is going to have a harder time on world markets, even outside of Europe. And that's because of sanctions that Western countries and G7 countries have put in place in recent weeks to really make it that much harder for other nations to purchase that oil. And that's what we've seen in recent days, actually, is that even purchases being offered at discount by state-owned oil company Rosneft have been rejected. They've been ignored. Even traditional countries like India that have looked to pick up some of those oil purchases in the past, or oil sales in the past, ignoring some of those offers. So this could be a big dent in Russia's account, and that's exactly why European nations are eager to push forward with it.
All right, and what can we expect from the markets in Europe this week?
Well, after a rather stable week last week, what we're looking at now is a week that could have a lot of factors that are sort of pushing it around a little bit. DAX already down today slightly, following Asian losses earlier today, and that's based on some of the sentiment out of China, where there are more and more concerns over the state of the economy there. Also over some of the over the American numbers from last week, looking at growth numbers, some concerning signs there. But really, all eyes this week are going to be on the Federal Reserve and what it's going to do with benchmark interest rates in the U.S. It's expected to raise them by 0.5 percentage points, and that, of course, has a ripple effect across Europe and across the world. So this could be another tumultuous week. We could expect that, but all eyes are really going to be towards Washington, D.C. later this week.
That's true, Stephen. I mean, that hike is something that's been talked about a whole lot, and of course, the ripple effect is what we'll be waiting to see. Thank you so much, Stephen, and enjoy the rest of your day. We're moving on now. Shares in Asia Pacific slipped today with data released over the weekend showing Chinese factory activity contracted in April. In Japan, the Nikkei 225 closed 0.11% lower as shares of robot maker Fanuc dropped 2.26%. The Topix index dipped fractionally to 1,898.35. Elsewhere, South Korea's Kospi finished the trading day 0.28% lower at 2,687.45. Australia's stocks also closed lower, with the S&P AX 200 falling 1.18% to 7,347. MCSI's Broadex Index of Asia-Pacific shares outside Japan slipped 0.56%. In the United States, stock index futures were higher during early trading today after the Nasdaq Composite Index posted its worst month since 2008, pressured by rising rates, rampant inflation, and underwhelming earnings from some of the largest technology companies. Futures contracts tied to the Dow Jones Industrial Average gained 0.39%, while S&P 500 futures were 0.33% higher, while Nasdaq 100 futures climbed 0.46%. The Dow dropped 939 points during the session, bringing its loss last week to roughly 2.5%. It was the 30 stock benchmark's fifth straight negative week. The S&P 500 declined 3.63% on Friday. That was its worst day since June 2020 and posted its fourth straight negative week for the first time since September 2020. The Nasdaq also posted a fourth straight week of losses after falling 4.2%. Both indexes registered their lowest closing levels of the year. The Dow and S&P 500 are coming off their worst month since March 2020, when the pandemic took hold. The Dow finished April 4.9% lower, while the S&P tanked 8.8%. The selling was even more extreme in the tech-heavy Nasdaq Composite, which plunged 13.26% in April, and that's its worst since October 2008. The steep decline follows underperformance from large tech companies, including Amazon, Netflix, and Meta Platform. Now, Netflix is down 49% over the past month, with Amazon and Meta losing 24% and 10.8% respectively. Well, still in the United States, the spring meeting of the World Bank and International Monetary Fund was a good time to discuss consequences of the Russia-Ukraine conflict on Africa and efforts by the Africa Development Bank to buffer some of those effects. Well, the Atlantic Council Africa Center made the most of that platform and had a conversation with Dr. Akinwumi Adesina, the president of African Development Bank. Dr. Akinwumi emphasized efforts of the bank through Africa Emergency Food Production Plan of $1.5 billion and a platform called Technologies for African Agricultural Transformation, as it says that 30 million metric tons of food will be lost to the war.
Well, I think for me, the most difficult thing is heart-wrenching nature of the war that I see. It's not just about, I'm not just worried about the impact in Africa, which of course I'm going to talk about, but how about the Ukrainians? How about their children? How about the people? How about the communities? I mean, each time I turn on the television and I see that, for me as a father, as a grandfather, it is very heart-wrenching. This is a war that needs to stop. Because it's not just about economic issues, about financial issues, about life issues. So I really do hope that we focus on that and make sure that this actually ends. Having said that, I think that the issue here is to look at the broader contagion effects that this has actually had. Check, for example, the impact it has had on the food production, food security globally. Now, look at the price, Ambassador, of wheat. The price of wheat has gone up by about 64% more globally. If you look at Africa, maybe average about 45% in terms of price of wheat. The price of maize has also gone up, of soybeans, of rice has gone up. And don't forget, out of the basically $4 billion that Russia exports to Africa, total value of export to Africa, 90% of that is actually for wheat. And if you take Ukraine, probably about of the $4.5 billion of exports to Africa, almost 55% of that, 54% of that is for wheat, and 31% of it is for maize. Now, the West Africa, I mean, not even West Africa, but it's Eastern Africa region, everything is maize. Everything is maize. Everything is ugali. Everything is even Southern Africa. Well, the point is, in Eastern Africa region, 90% of all their cereals come from these two countries. So you can imagine that is going to be a big impact. The second impact, which is going to be very serious, is fertilizers. The price of fertilizers have gone up by about 300%. And access to fertilizer becomes a constraining factor. In fact, today, Africa has a deficit because it imports a lot of those, about roughly almost 2 million tons. So we got to be able to deal with that. So what we are doing at the African Development Bank is how do we respond to that? You know, that's why at the bank we designed what's called the African Emergency Food Production Plan. That's the reason why I'm in Washington. We ourselves are putting our monies where our mouth really is. This plan that I mentioned to you, Ambassador, is to put in $1.5 billion into producing food. And that will produce about 38 million metric tons of food. Today, the gap that Africa will lose in terms of this war is about 30 million metric tons of food. So we can produce 38 million metric tons of food over 2 years that will cope with that particular gap. And the thing is, we're looking at the commodities that matter. We're looking at wheat. We're looking at about roughly 11 million metric tons of wheat. We're looking at 18 million metric tons of maize, 6 million metric tons of rice, and about 2.5 million metric tons of soybeans. So all in all, we have the technology, we have the delivery platform, so many of the things that we've been doing at the bank, supporting through a platform called Technologies for African Agricultural Transformation, that is actually delivering technologies to maybe 12 million farmers today. So we know what to do. And we will put $1 billion of our money into this. It's in front of our board. But we are raising $500 million.
That video was courtesy Atlantic Council Africa Center, and the interview was conducted on the sidelines of the Springs meeting that was in Washington. Moving on now, oil prices fell today as concerns about weak economic growth in China outweighed fears of potential supply stress from potential European Union ban on Russian crude. Brent crude futures fell 71 cents to $106.43 a barrel, while U.S. West Texas Intermediate crude futures fell 70 cents to $103.99 a barrel. Markets in Japan, India, and across Southeast Asia are closed for public holiday today, and prices fell after China released data on Saturday showing that factory activity in China has contracted for a second month to its lowest since February 2020, and that's because of COVID-19 lockdowns. On the supply side, Libya's National Oil Corp, NOC, says that it would temporarily resume operations at the Zutaina oil terminal to reduce stockpiles and storage tanks to avert imminent environmental disaster at the ports. In the metals market now, gold prices slipped to their lowest in 4 weeks as prospects of aggressive policy tightening by U.S. Federal Reserve and a stronger dollar dented the precious metals appeal. Spot gold fell 0.7%, earlier hitting its lowest since March 29, while U.S. gold futures were 0.9% lower. Silver fell 2% to $23.65 per ounce after hitting an over 2-month trough. We'll take a break now. When we come back, we have a lot of stories for you from the African continent. Do stay with us. This is Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated on Channels Television. Nigeria has been ranked 102nd out of 104 globally and 22nd in the African continent out of 23 countries, and that's for the Good Government Index. Among lower middle income countries, Nigeria ranked 28th out of 28 countries, while among sub-Saharan African countries totaling 19, Nigeria ranked 18th. Among lower middle income SSA countries at sub-Saharan Africa, a total of 7, Nigeria ranked 6th. And Nigeria, however, performed well in ranking 39th in international diplomacy, 85th in international trade indicator. That's a rise in 13 positions from 2021. The country ranks 39th in the international diplomacy indicator, and that's a rise from 6 positions from 2021. It's ranked 80th in macroeconomic environment indicator, and that's also a rise of 5 positions from 2021. All this is from the Chandler Good Government Index, designed by the Chandler Institute of Governance, and is deemed the world's most comprehensive index of effective national government. It shows the importance of investing in enhancing the capabilities of public servants and the structures they operate within to achieve a better and more sustainable future. This year's edition, which is the second, builds on the success of the inaugural edition launched last year and comes at a critical time as governments around the world look to recover from the pandemic. Still staying in Nigeria, the country has signed an agreement with Cuba on contract manufacturing, vaccine production, technology transfer, contract manufacturing and commercialization of Cuban biopharmaceutical products in the West African country. According to Nigeria's ambassador to Cuba, the agreement was at the just concluded 2022 Bio-Habana International Conference, which was from April the 25th to 29 in Havana. In 2020, Nigeria imports from Cuba was at $247.06 thousand and that's according to the United Nations Comtrade data on international trade. And then still in Nigeria now, the significant drop in the number of micro, small and medium enterprises in the country within the last couple of years has been attributed to numerous factors, particularly the COVID-19 pandemic, as well as other economic headwinds. The Director, Enterprise Development and Promotion at the Small and Medium Enterprises Development Agency of Nigeria, Mr. Monday Evans, made this known when he appeared on our business show this morning. Business Morning, he spoke with Laddie Williams.
SMEDAN as an agency has been partnering with the National Bureau of Statistics to roll out these statistics for MSMEs in this country. In 2010, it was about 17 million. In 2013, it was about 34 million. In 2017, it was about 41.6 million. And then recently, as at 31st December 2020, it came down to 39.6 million, which is about 4.5% drop in the figure of 2017. Of course, the issues concerning the drop is very, very clear, because within this period between 2017 and 2020, there was this major outbreak, the COVID-19 issue. It affected businesses across the world, especially in Nigeria, because most of the businesses are dealing with contact persons, physical markets, and so on and so forth. So when the COVID-19 came on board, there were lockdown, there were insecurity, there were banditry, terrorism, and the rest and the rest. So this affected some of these businesses. Some of them closed their shops. Some of them lost turnover, they lost markets, and so on and so forth. So mainly issues related to COVID-19, terrorism, insecurity really affected the lives of these small businesses, and most of them had to close down because of this issue. So that was why there was that drop of about 2 million from 41.6 million to 39.6 million, which is about a 4.5% drop. Affordable finance is key to business operations of small businesses. But from our own perspective, funding is not the only issue, because if you have funding finance, if you don't have the skills to manage that funding, the finance will fritter away. And then even if you have funding and you have the skills to manage it, and if you don't have a guaranteed offtake arrangement that has access to markets, you've also wasted your time. You won't achieve what you want to achieve. But it is essential that if you must have that finance, you should have the skills, you should have the markets, and of course, the enabling environment is also key, which includes what my brother talked about, infrastructure, and so on and so forth. So for finance, yes, it is key.
Away from Nigeria now to Kenya, where the President Uhuru Kenyatta has announced an immediate increase in the country's minimum wage by 12%, and that's to help workers cope with a surge in consumer prices driven in part by the war in Ukraine. This is in spite of a compelling case to review the minimum wage so as to cushion workers against further erosion of their purchasing power as Kenyan workers join the world to celebrate Labor Day. The president says this was necessary because the minimum wage had not been reviewed in 3 years and the cost of living has increased. Kenya's current minimum wage is 13,500 Kenyan shillings, and that amounts to $116.68 every month. Angola's Attorney General has revealed that more than $100 billion was illegally withdrawn from Angolan Treasury until 2017 in illicit transfers, and the cash was stashed abroad. In 2017, President João Lourenço took over from José Eduardo dos Santos following a general election marking the end of the Santos' 38-year reign and launched an anti-corruption campaign that his predecessor has resumed. In 2017, the Transparency International Corruption Perception Index ranked Angola 167 out of 180 countries surveyed in 2021. After 4 years, the Southern African country was ranked 136. This suggests that the anti-corruption campaign has borne fruits. Sectors such as construction, public works, oil, and diamonds were the most affected by the illegal transfer of cash from Angola to foreign destinations. In the last 3 years, more than $5 billion were recovered in financial and non-financial, as well as another $12 billion seized in some cases, while other cases culminated in the seizure of movable assets constituted with public funds. Well, Mr. Gross said that at the ceremony of international conference. Well, that's it for the program today. Thank you so much for being a part of it. Let's do it again tomorrow. I'm Ini John Mekwa.